you're trying to speak for the committee when you do these press conferences, but the committee is clearly divided right now, at least about the outlook and the appropriate policy path. Some people think you need to wait and see the labor market and the consumer crack or weaken further before acting more aggressively. And some people think that by the time that happens, you'll need to do even more aggressive action to arrest a downturn. Where do you stand on this?
Well, let me just say, on the general point of diverse perspectives, you're right. Sometimes and there have been many of those times in my now almost 8 years at the Fed, many times when the direction is relatively clear and it's relatively easy to reach anonymity. This is a time of difficult judgments, and as you can see, disparate perspectives. And as I really do think that's nothing but healthy, and so I see a benefit in having those diverse perspectives, really. So your question, though, is?
As to your own view, because the data is to some extent lagged, especially when you have these risks on the horizon. And the markets obviously think these risks could materialize more than what you and your colleagues are projecting in the dot plot today. So I wonder, where are your own views about the tension between risk management, which implies some degree of data independence, and this idea of being data dependent?
Yeah, so I'll try to get at that this way. I think that the idea that if you see trouble approaching on the horizon, you steer away from it if you can, I think that's a good idea in principle. And I think history teaches us that it's better to be proactive in adjusting policy if you can. I think applying that principle in a particular situation is where the challenge comes. So I told you where the committee, the bulk of the committee is going meeting by meeting. And I think the main takeaway is that this is a committee that has shifted its policy stance repeatedly, consistently through the course of the year to support economic activity as it has felt that it's appropriate. At the beginning of the year, we were looking at further rate increases, then we were patient, and then we cut once, then we cut again. And I think you've seen us being willing to move based on data, based on the evolving risk picture. I have no reason to think that will change. But it will continue to be data dependent, and data includes the evolving risk picture. That's where I am, and that's where I think the bulk of the committee is.